Thank you all for attending. We're still getting attendees as we go along, but let's kick off. This is Deborah Graves of Looking for Care. I'm the co-founder and CEO of Looking for Care, which is our industry's online directory for senior living. We're currently only in California, but we'll be expanding nationwide by the end of the year next year. I have 4 panelists with me. They've all been graciously willing to donate their time to help you understand how to remove financial obstacles from your prospects. The 4 panelists that we have include Alex, CJ, and Matt from American Veterans Benefits. CJ and Matt are going to be standing in for Alex, who has a bad case of laryngitis. We also have Miss Wendy Reinhardt from the Midwest, from FSC, Family Solutions for Care. She's going to be talking to you about how to help your prospects collect their long-term care benefits. I also have, here in California, Patrick Johnson. Patrick's going to talk to you about a couple of different strategies that have to do with insurance, both having insurance and then signing up for some insurance. And finally, we have John Baker with Elder Life Financial. Elder Life has a product that's quite exciting for senior living sales leaders, and that has to do with bridge funding, which could expedite some of your move-ins with some very attractive financing. So I'd like to kick it off right off the bat with American Veterans Benefits. Oh, and by the way, a little housekeeping. You may raise your hand electronically and post a question and or a chat. We do have Kathy and Oselda operating the chat and the questions. We will be addressing the questions at the end of each section, then at the end of the presentation. We will also be sharing contact information for every single one of our presenters at the end. Take it away, American Veterans Benefits.
Hi, everyone. Thank you, Deborah, for having us speak. And thank you for all the attendees, again, for taking the time to time out of your morning to listen in on some of these wonderful services that are being offered. My name is Chris Jeremy, CJ. I'm here present with Matt Squazza, and again, we're going to be talking on behalf of Alex Dela Cruz. We're going to be flip-flopping speakers, me and Matt, just kind of going over each one of these slides and describing the services that we offer. So Matt, you want to go ahead and introduce yourself?
Hi, welcome everybody to the webinar. My name is Matt Squazza. I'm a 20-year retired Navy chief and started working with American Veterans Benefits alongside Alex for about the last year or so, and looking forward to help all my brothers and sisters out there. So, what we do. Yep. Next slide, please, Deborah.
Yes.
So for agenda today, pretty much what is aid in attendance, who is the ideal candidate for aid in attendance, how to qualify for this benefit, why you should work with American Veteran Benefits to provide assistance.
So what is aid in attendance? This is a special monthly pension passed by Congress back in 1952, and it was designed to offset the costs of long-term care. This provides veterans and their surviving spouses a tax-free pension to help pay for their care. So some of the things that this monthly benefit will help pay for is in-home care, assisted living facilities, residential care facilities for the elderly, and some board and care facilities. This benefit is a non-service connected pension, meaning they don't need to get a disability as a result of war. It's just, you know, they can get it just for getting up there in age and being dependent on someone to help them with their daily activities. So next slide.
Hey, Chris.
Yes, ma'am.
We just had comment that it's kind of hard to hear, so I think you're going through your laptop or your computer speakers. If you could make sure that you're close to that speaker, that'd be great. Because we're really having trouble hearing you.
Okay, is that better?
I think so.
Okay.
I think so.
Let me go ahead and repeat this slide one more time. So the aid and attendance benefit is a special monthly pension passed by Congress back in 1952, and this was designed to offset the costs of long-term care. This will provide veterans and their surviving spouses a tax-free pension to help pay for their care expenses. So this benefit will trigger if you have things like in-home care, if your mother or loved one is in a boarding care facility, a residential care facility for the elderly, or even an assisted living facility, and even adult daycare facility. This is a non-service connected pension plan. So next slide.
Oops. Oh gosh. There we go.
I think we are one ahead. Can you go back one slide?
Sorry about that.
All right, no worries, no worries. So qualifications, military veteran must have a minimum of 90 days active duty with at least 1 day during the wartime period, whether that be World War II, Korea, Vietnam, or Desert Storm. They have to be 65 years or older or disabled. Any discharge other than dishonorable. 2 is a medical physician report, form 21-2680, must say that you are in need of 2 out of 7 activities of daily living, whether that be ambulation, bathing, continence, dressing, eating, toileting, or transferring. One of the things is that legally blind is an automatic qualification. Diagnosis of MCI, which is mild cognitive impairment, dementia or Alzheimer, with a recommendation from the physician saying you need to live in a protected environment. So the doctor must state that you cannot stay or be alone safely. Next slide, please. Oh, sorry. Yeah, we got a couple more. Another thing is your income versus your unreimbursed medical expenses, your UMEs. Your UME must zero out your income to get the maximum pension. So your UME, the healthcare cost, Medicare Part B, the cost of home care, ALF, board and care, these are all part of the UMEs themselves. So whatever you make and then what if you have to actually pay for your medical care, that will actually bring everything in. Your assets, your home is exempt, so that cannot be actually counted towards it. Your liquid assets have to be under $126,240. Next slide, please. There we go.
Okay, how it works. So the documents that we're going to need, married veteran with a spouse, we're going to need a marriage certificate, military discharge paperwork, some examples of that. Pre-World War II veterans, they're going to get a document called a report of separation, or after 1950, they're going to receive what's called a DD-214. DD is Department of Defense form number 214. If they are a single veteran, they're going to need the same paperwork. Again, a report of separation prior to World War II or DD-214. And a surviving spouse. Surviving spouses will need a marriage certificate, that same discharge paperwork, and also a death certificate for the service member. Next slide, Deborah.
All right, so the maximum pensions for 2019, everything will always be upgraded on our website. Surviving spouse gets $1,209 a month. A single veteran is $1,881 a month. The veteran with a spouse that is still married is $2,230. A veteran with a sick spouse, $1,477. And a veteran with a veteran spouse is the most at $2,984.
Okay, now I have a question, gentlemen.
Yes.
So this means that that a prospective resident who qualifies, goes through that big qualification process, every month they could be entitled to one of these additional benefits. So that could mean as much as almost $3,000 more than what they have per month. Is that what you're saying?
So on top of their Social Security that they get, they can actually get this pension from the government for the aid and attendance. If they're already collecting a disability from there, the government will only allow you to have one or the other. So if your disability is only at like 1,200 and you can get the 1881, that's going to be more beneficial for you to actually take that than it is. So yes, it is just the extra income for that to help aid for everything.
I just had a question. Why is a vet with a sick spouse not given as much as a vet and a spouse?
Let me go ahead and repeat that question. Why is a veteran with a sick spouse less?
Not given as much as a vet and a spouse.
Yeah. It's because they're not the veteran. The sick spouse is
Okay.
not the veteran. So we're really just solely the VA wants to reward the families, right? Regardless if they're the veteran or the spouse. And they recognize that. They say, hey, look, you were married to one of our service members, and we're going to go ahead and provide you with that benefit as well. So the difference between the last two is, one, the spouse is still alive, and then I'm sorry, the third and the fourth bullet, the spouse is the one that's sick, and the third bullet is the one with what they're both needing care. So, for example, real quick,
Okay.
You might come across an RCFE and where mom and dad want to live together and spend the rest of their days together, but they both can't take care of each other. Well, that's the 2230.
Okay, thank you for clarifying that. So the bottom line is, all of our sales leaders should be asking if there is a veteran, if the actual prospect is a veteran, or if their spouse, even if their spouse is divorced, correct?
Once the spouse divorces that veteran, they're also divorcing the benefits that come along with that veteran.
Okay. All right. So
yeah.
I have another question, CJ. If the veteran doesn't need help with care, they can still qualify if the spouse needs help.
That's absolutely correct. That's number 4 right there, veteran with a sick spouse. So why American Veterans Benefits? Well, number 1, our services come at no charge, and it's complimentary to our clients. We guide them through the application throughout the approval process. We track the application through the VA system. We work very closely with the certified and accredited veteran services officers to complete the application. So for every county, you're going to have a veteran service office. They are also aware of the services that we offer. We actually help them. We pre-screen some of these veterans. And the advantage that we have here is that we're able to actually go out into the community, in the home, and get a better idea of what's needed. Whereas the veteran services officers, they're stuck in an office at that county office all day long, and they need to stay there. And we actually make their job a lot easier. And then last but not least, we establish frequent communication.
That's better. Okay, so I have 2 more questions, and then we're going to have to move on. We can finish the questions at the end. Some family members get discouraged because they don't know where the discharge paperwork is. Do you have a easy solution for that, or is that pretty much a requirement, is finding that discharge paperwork?
Yes, we've had that issue come up before, and we can certainly help them find their discharge paperwork, as well as the veteran service officers that are available through each county. If they make contact with them and just say, I'm in need of finding this paperwork, yeah, we can certainly help out with that.
Okay. Then we have another last question, and this is the last question. We're going to move on, is to clarify the divorced spouse. So even if they don't remarry, once you've divorced the vet, you've divorced the VA. Is that correct?
Yes, that's correct.
Okay. And I just want to tell all of our attendees that all the contact information for each one of our resources will be emailed to you to the registration email that you sent to us. And if you have any policy questions or procedure questions for Alex or any of our presenters, please don't hesitate to reach out to them. That's why they're here. So thank you, guys. That was wonderful. Okay, next up is Miss Wendy Reinhardt, President and co-founder of Family Solutions for Care. This is an amazing resource. Long-term care insurance is an absolute great strategy for families, and more families are signing up for long-term care insurance. They're paying their premiums, but then when it comes time to collect, sometimes it's not as easy as it possibly could be. And Wendy's here to help your prospects collect on those valuable benefits that could actually help your families move in. Take it away, Miss Wendy.
All right, thank you. Well, thank you for everybody for taking your time today. I'm Wendy Reinhardt, and Deborah, thank you for organizing this. As Deborah shared, I'm in the Midwest, but we work all over the country. I have an insurance. I used to sell long-term care insurance until people started going on claim, and then I went through what this woman is going through on this slide when my brother had a claim for his long-term care policy. I called the claim department and got misinformation, and after my brother's passing, we started a company to help seniors and their families get their full benefits. There may be people here that work in communities and you think that you've worked with long-term care policies and you've had some success. But what a lot of people don't understand is that there are a lot of moving parts going on to long-term care policies. There's 400,000 variations. And they're, as you guys probably know, the companies are not in the business anymore. So they've outsourced their claim processing on their side to, thank you, Deborah, that's fine, go ahead. They've outsourced their portion of their process of the claim on their side to a third party. So typically families are calling into a third party vendor who has a call center kind of environment. I'm not knocking that because they're not doing a bad job, but what we need to do is help our seniors and their families understand, first of all, what they've got in a long-term care policy, how it's going to work, and I'm going to show you a slide in a minute. But a lot of what I want to talk about today is getting families retroactive benefits. And what that really means is that we're going to get benefits for families so that when they move into your community, they've already got money in their pocket, and they don't have to wait another 90 or 100 days before their elimination period kicks in. We have helped families. We are referred families from across the country by attorneys, elder law attorneys, assisted living, call centers, placement people, home health providers. We've actually helped access over $150 million for clients. Our biggest retroactive benefit check is $142,000. And that was a family that we helped that's in California. And so families, when they work with us, they go from that woman in red with all the stress and different things pulling at her to being extremely grateful. We get lots of tears when we help families, and we call them up and tell them we're sending a $100,000 check your way. Okay, so when you refer a family to us, the first thing we do is we review their situation. I actually should probably switch these things around, but we want to know how urgent it is. So we're going to talk with the family. We want every referral of a family that has a long-term care insurance policy. But then if they're looking at moving into your community tomorrow, we're going to talk about their health history, then we're going to get a copy of their long-term care policy, and we're going to go through what they can expect. This takes a little bit of liability off of the assisted living community because you guys are not pressed to give them an answer. You can simply refer them to us. Now I had this question asked yesterday. We get lots and lots of referrals, and we do a lot of free reviews. Sometimes that's all we do. In fact, about 80% of the time, we just do a free review, help the family understand what they have, and then they move on, and that's all they needed. But there are times when a family, either for lots of reasons, either they're stressed and they've got too many things on their plate, they don't live close to their family member, and they need help. So if they ask for help, and we only make a recommendation that people hire our team if we think it's a fiduciary responsible thing for the family. But if they want help, then they contract with our team, and we can help them get their claim benefits. And on average, we get a family $23,000 going backwards in retroactive benefits. So families get their money faster. And again, assisted living facilities and communities and providers don't have to try to figure this out or fight with the insurance company. But most importantly, the family doesn't end up having to fight with the insurance company. Go ahead, Deb.
Okay, I have a couple of questions before we go further.
Okay.
First of all,
Absolutely.
Does this outsourcing include CalPERS?
CalPERS outsources their claim processing to a third party, and I'm not going to tell you who it is because it's not really, they try not to make this information public, but they are one of the companies that outsources to one particular third party that we are very close with.
Another question, retroactive, what if that person has passed away?
We have, that's a very good question. The check that we got was in fact, the largest check, the $142,000, was a very sad case. It wasn't CalPERS, but it was another carrier. And I want to say, I don't think carriers are bad. I don't think they're bad, good, or indifferent. It's just, they're just a lot of moving parts, and these are complicated products. But this client was referred to us, it was a husband and a wife, and we were working with the daughter. The husband had recently passed away and according to his daughter, in frustration of fighting the insurance company over his wife's claim. His wife had Alzheimer's. He had some medical needs, obviously, as well. He had a heart attack and died while he was fighting with this particular insurance company. We took on the claim, and then the woman with Alzheimer's passed away as well. We went backwards. We were able to go back a year and a half on the woman's claim. Even though she had passed away, we had already started it, and so we were able to keep going, and that's what generated the $142,000 to be paid to her estate. We actually are still working on that case because the husband also had a claim, and that claim is still open, even though he's been passed away, deceased for almost 2 years now. So obviously we don't want that, and this is a very difficult situation. But that family, when we called them and told them we had settled it, she just burst into tears, and they were able to put that money into a trust for the family. So it makes a difference for generations of families.
I have another question for you. Have you ever seen long-term care insurance cover age-restricted plus 55 multifamily apartments?
In California, you guys have some different you call things differently than other states. It depends. I mean, the short answer is yes, but it might not pay rent, but it could pay for home health care. And there are times when we can get out-of-pocket expenses that the family wouldn't have known. So we have a case right now. This family just hired us this week. And they have a policy that would pay for a family member or friend, as long as they don't live with the resident. No matter where they are, they would pay a certain dollar amount per day for up to a year. So this family has hired us because we're going back, and before we even start, we know we're going to get this family, because there's two of them, we're going to get them almost $30,000 in benefits for last year. So they're walking into a community with $30,000 in their pocket. And by the way, they didn't have any out-of-pocket expenses. So if it's a, age restricted, who we don't know. This is why we want to talk to every single person that you come in contact with that has long-term care insurance. We want to talk with them. We review the policy. We have a very specific order and list of questions that we look for in a policy. And then we call the family back and we help them set up a game plan or a strategy. And we love communities being involved as long as the family is also involved. And obviously we like it when we're talking with a family, the senior, and one of their son or daughter or some relative, for everybody's protection. Okay, so again, our average retroactive benefit check, and by the way, there's nothing in a long-term care policy that says retroactive benefits. That's just a word that we sort of came up with because we're looking backwards. But there's never a thing that says it's retroactive. There's also nothing in a policy that says it's a cash policy, and there's nothing in there that says, for the most part, it's a reimbursement policy. You have to know the language and understand the intent of these contracts in order to really read these policies. And because there's so many, it's complicated, and that's why families can't sort through them. And they call me and they say, you know, I'm a CPA, I worked in business, I have an MBA, I have no idea what this thing says. So we help families through that. Sometimes, so back to the veterans benefits, sometimes people don't have their DD-214. A lot of times people don't have their long-term care policies. They don't have a copy of it. And if I don't teach you anything else, one thing I would like to teach you today is refer families to us, but don't let a family file a claim or call the insurance company without having a copy of their long-term care policy on hand. And a lot of times if they call the insurance company will try to rush them through to a claim conversation. But until they have that long-term care policy in hand, they really don't want to be contributing too much information to the insurance company because they don't know exactly what the insurance company is looking for. So just to be safe and to make sure claims are able to be approved 100%, don't offer information until you know what the rules of that policy are. And by the way, a lot of times when the families don't have a copy of the policy, I call the insurance company with them. So by calling the insurance company and waiting through the long hold times with them and then asking them our form of questions, we are able to get that client and their family started in a direction with an idea of the coverage because we know the industry. And then we always ask for a copy of the policy to be forwarded to the family member. So we'll help them get a copy of the policy. We'll help them understand what they have, even if they don't have a copy. Okay, so we put this in here just to kind of give you an idea of retroactive benefits. But what this means is if somebody moves into your community on, I put December 7th, which is a terrible day to put on here, but if someone moves into a community the 1st of December, but we find out, or we work with them, and we find out that the family has really been taking care of them for the last year or maybe 2 years. It is very, very common that we are able to find days that can, at the very least, count towards their elimination period. And most of the time, we also find reimbursable days that they can be paid for. So again, they may move in December 1st, and if you start their elimination period that day, they've got 90 days before they get any benefit dollars if their elimination period is 90 days. But if we're working with them and we find out that they really started needing care earlier in the year, then we can find them, in this case, $18,000 that they're walking in the door to your community with. So you're not having to have that downtime. We take it off their plate. And I want to address one thing. Sometimes communities that we run into tell us that they handle this part of for the family. And respectfully, I would say the assisted living facilities or any provider for that sake only does a portion of it. What they don't realize is the labor and the amount of work that's put on the family. but all the medical records from prior care, all the doctor's records, even the plan of care, care assessment, when we're involved, we help make sure that those things are documented, that all the documentation from every provider is correct and it remains correct. It is very common that people get moved in. Well, let me ask you that. I guess it's a rhetorical question, but people move into communities, and you guys, because they're in your community, they stabilize and sometimes they get better. And sometimes that can kick someone off of claim. But what we've learned is if we stay on top of it, sometimes we can prevent that from happening, because the interpretation of the long-term care benefits, sometimes assisted living facilities are more stringent in their description of assistance than the insurance company expects. And so sometimes there's a little bit of room we can work with. We always, of course, only report the truth. But sometimes we can report it in a way that the family still gets their benefits, even though they may have stabilized and they're not quite as a risk as they were before. Next.
So it sounds like when in question, call an expert. That's what it sounds like.
When in question, yeah. One of our very first business partners that we had out the gate said, I get it. You guys are like, it's like hiring a CPA to do your taxes. And that analogy is exactly correct. People are looking to get hundreds of thousands of dollars out of their benefits. They are in much better shape if they have a team around them, and we have a team of people. They have a team of people that is working 100% on their long-term care insurance claim, so the family can get back to the business of other things that they have to do. And we know there's houses to sell and visits to be made and medications, and we got to manage their care. So we take this one piece off their plate so they don't have to be addressing it. That particular example, you guys can see how we come up with $180,000 or $140,000 in the past. On that example, we came up with $42,000. And this happens, this is not just some of the time, this is most of the time. Most of the time, there are prior days that can be applied. And it might be that they were in a hospital, then they were in a skilled nursing home for rehab, and we just get those days to apply. But if those days weren't documented correctly, then they don't get counted. Some policies will let you go backwards forever. Some policies will only let you go back for 6 months. They're all different. There is no uniform. There's no standard in this industry, which is what makes it so frustrating.
Sounds daunting.
So there are a lot of long-term care communities, facilities, whose corporate offices have told their teams to not give any more information, not to be mean, but not to give advice about how long-term care policies work. Because at the end of the day, long-term care insurance is a financial instrument. And much like people that work as caregivers or work in communities, can give a general understanding of VA aid and attendance, but they're not giving actual advice on how it works, because that's what Alex and his team are for. So it's the same, really a very similar thing. This is a huge financial liability. And so there are, again, nationwide companies such as Sunrise and Benchmark and Brookdale who have encouraged their teams not to give advice about this financial product. So we're here to be your back room, to have your back, to make sure that your families that you're working with get the right information. And sometimes when you refer a family to me and I work with that family, I may call you back and say, I don't think it's going to work. And I don't want to take away a move-in for you, but we don't want to put anybody in a position where they are now stuck with a bill and they've moved their loved one in, and then they can't pay it. And we get those calls all the time. So we would rather arm people with the truth than to let them move in and believe that something's going to happen. We want to protect our seniors and you all. that way, because it's a liability for you as well. We have not, so I'll just leave it at that.
I have a question.
Okay.
How do you charge? How do you monetize your service, Miss Wendy?
Yeah, great question. So we, again, we are referred families, and out of 100 families, we might end up 20 families might actually hire our team to help them through the process. When a family hires our team, we have flat rates, but we don't recommend our services to anybody if we don't think we're a good fit for them, if we don't believe that we are genuinely the right fiduciary fit for them. But when they hire our team, we get a HIPAA form signed, we get a limited power of attorney so that we are capable of talking directly to the carrier on their behalf. We become the intermediary between all the entities that are helping to get these benefits paid, and we remain that. So some families hire us for short term, for just a short term, in like a hospice situation, might hire us just temporarily, and we have an hourly rate, and then we have some people hire us for a full annual support package, which means we take it A to Z. So we take it from the very beginning, we get it approved, and then we manage it every single month. And as you guys know, people move. Their needs change. They move to different places. They might start as home care. They might go to assisted living. Then they might progress to a memory care that may or may not be attached to the assisted living. So we are the part that's consistent with them the entire time. And we maintain all of their medical records, and all records, really, not just medical records, but all records regarding the claim we house, so the family can access it if they need it for any reason. So we are here to support you. We're here to support your families, and together we want to make sure that we make this a great experience for families that you guys serve. We do have a toll-free number for your families, so and I'll shoot that to Deb. But it's 844-858-4500. And we are always honored and humbled to serve families and thus serve you all. So with that, any more questions?
The only remark that we got was they're looking for specifics about your fees, but I think that's a conversation between the family and your office, correct?
Yeah, anywhere from $300 to $5,000, depending on what they need.
Got it. Okay. Thank you so much, Wendy.
But,
all right.
Let me finish by saying, most of the time our fees are zero. 80% of the time, zero.
Okay. Yeah, I know that feeling.
Thank you, Deborah.
We're in senior living after all. All right, thank you for that great information. Next up is Mr. Patrick Johnson. Take it away, Patrick.
Yeah, good morning, Deborah, and thanks everybody to be on the phone this morning. In my long-term care payment options business, I help people ages 30 to 90 get long-term care life insurance to pay for extended care. But by the time they're going on claim and they're going into a care community, there's only a couple things left that we can help them with. And one of them is if somebody has a life insurance policy, instead of cashing that policy in, the cash value, back to the carrier, we have a company called GWG that is the only publicly traded company in the country that buys somebody's life insurance policy from them. And typically when someone has a life insurance policy, they've got cash value, a surrender cash value. If they cash that in, they might get maybe $50,000 out of the plan, and that's all they've got to work with. Clients age 70 and up, they got some failing health. GWG would like to look at buying that. And this is a free service. We're not selling anything. This is a free service to the customer. You don't need any signature in California or anywhere in the country to start the process. And what we're trying to do is establish a life expectancy for this client. And once I get that paperwork turned in, GWG will call that client for a 45-minute interview to ascertain how their health is, their lifestyle, review the policy, And if they do need to get medical records, we can do a HIPAA and get those records. GWG is interested in buying that policy from these people, and typically when they make an offer, it'll be 5 to 10 times the existing cash value. And if the client accepts that offer, GWG will write the client a check. They'll become the owner and beneficiary of the policy. They'll continue making premium payments to that carrier. And when that client dies, that's when GWG will get the death benefit. So,
Okay, but Patrick, I have a question. My dad did this, and he was making his life insurance premium payments, and as he got older and as his health started to deteriorate, the payments got to be astronomical, thousands of dollars a month. So he was just going to let the policy go and get the cash, what you're calling the cash value out of it, which was
Right.
just a small amount. But you're saying it could be 5 to 10 times more. So a $50,000 cash amount could be $500,000.
Yeah, absolutely. And you just hit it on the head, is the fact that the client's got kind of two problems. One is they've got this life insurance policy with maybe $1 million death benefit, and they're having trouble making the premium. And then on top of that, they've got to come up with other cash to move into the care community. So that's where this started quite a while ago, as carriers behind the scenes are starting to buy these policies. We like GWG because they are the only publicly traded company in the country doing this. We like the look of that. And again, it's a free service. If they make an offer and the client doesn't want to accept that offer, they don't have to. Of course, that means that they keep the policy and try to find a way to pay for it. So that's out there. It's easy to do, and we're happy to help.
Financial decisions are a part of life. We buy things when we need them and sell them when we don't. The important thing is that we recognize the value of our assets. But what many people don't know is that just like a house or a car, a life insurance policy is a valuable asset. And if you no longer need it, the policy can provide you with an extra source of income. Unfortunately, when most people decide they don't need their policy or the premium payments become too expensive, they surrender it back to the insurance company, simply giving away a valuable asset that they've spent years maintaining. But there is a better way. We're GWG, and we want to help you uncover the hidden value of your life insurance policy. Here's how it works. First, call to tell us about your life insurance policy and get your questions answered. Second, we'll review your policy. If it's eligible, we'll make you an offer based on its fair value. Third, take some time to think our offer over. If you decide to accept, just let us know. It's that simple. The great thing is, we typically offer 5 to 8 times more for your policy than you may receive by surrendering it back to the insurance company. We have years of experience in this established market, and we've already helped many customers like you get a substantial return on the investment made in their life insurance. And don't worry, whether you're just looking for more information or decide to take advantage of one of our financial services, we'll make the experience as smooth and easy as possible. So give us a call today or visit us online at gwglife.com for more information and see how you could benefit today from the fair value of your life insurance policy.
We get a lot of calls where the client is going into a care community. Typically, dad has passed away, mom has sold the home, looking at care communities, and she's sitting on a lump sum of money from the sale of that house. A lot of people are looking for help on how to generate income. People are looking at their budget. They might be getting Social Security. They may be getting some income out of their IRA since they're over 70 and a half. Maybe they're looking at some other assets. What a lot of calls we get, typically female 75 might be sitting on, let's say, $500,000 of cash from the sale of the home. We'd like to show them what a single premium immediate annuity will do for them. This is an insurance product that's been around over 100 years. People fund it with a single premium only. It pays a lifetime guaranteed income to the client based on their age. As an example, on a $500,000 deposit for a female 75, I have the software for this, it will generate $3,000 a month for as long as this person lives. And it's guaranteed. Lots of companies have this. I have access to them. It's a very simple transaction. They fill out an application. There is no underwriting. There's no exam. And they write a check. A month later, they start getting monthly income. People like this because the kids are happy because the budget's done. Mom likes it. No, we got her out of the market, so we retired mom's risk. The care communities like it because they know the clients are going to be in there and there's less turnover. You have another slide there, Deborah?
I do. So this all kind of goes back to, what does the sales leader need to know to access these strategies? What kind of questions should they be asking?
Two of those questions are, do you own life insurance, and do you have an asset like a home that we could possibly use for funding?
That's great. That's absolutely great. Thank you so much, Patrick. We're gonna go to the next one, and there'll be time for questions in the end. Thank you so much. Okay, next up is Mr. John Baker. This strategy has to do with timing. Quite often, family members need to move into assisted living or get care, and sometimes just the assets aren't in a place that is accessible. That's where Elder Life can help. Take it away, John.
Yeah, awesome. Thanks, Deb. So, since the year 2000, we have been assisting seniors with their transition into senior living. And then other than our full suite of financial services that we offer, we're very unique in the way that we specialize in senior bridge loans. Today, we work with over 3,000 partnering communities across the United States, helping expedite their seniors' transitions into their communities. So that kind of leads us into the next slide here, which is, as sales leaders and sales managers, oftentimes the big hurdle for you guys with getting a potential resident moved in is, we love the community, we'd love mom to live here, but we just need to sell our house first. Or we love the community, we'd love dad to live here, but it's going to be really tight until his VA benefits come in. So that's really where the bridge loan comes in, and it helps bridge the gap from the time the senior needs care until the time they can afford care. So, what are we supposed to do when the senior needs to move now? Selling a piece of real estate can take 6+ months, can be costly to prepare for the market. Veterans benefits take 4 to 6 months to get that retroactive check to come in. Wendy had already talked about, those 90-day elimination periods we need to wait on long-term care insurance. And then liquidating an investment asset can come with a high tax burden and oftentimes penalties associated with it. So on the next slide, really what the bridge loan does is it allows the senior the ability to move in immediately, and it gives them and their family the time and flexibility to make the best financial decisions. The senior's not going to have to deplete their savings, nor are they going to have to sell their house below market value to some investor. They're not going to have to ask their adult children or any family members to cover any sort of shortfall for their care. And then most importantly, we're not having to delay moving into the community. That way we can get the care we need now, rather than 6 months down the road once we finally sell that house. So on the next slide are a couple bridge loan facts. It is a completely free application. It takes about 10 to 15 minutes to do over the phone with one of our financial concierge. We typically have an answer back from underwriting in about 1 to 2 hours on what our next steps are going to be, and we can have funds sent directly to the community the following day with our 24-hour processing time. So it's not uncommon for us to get a call at 8 a.m. on a Monday, go through the whole loan process, and have funds sent directly to community the following day. So we can really work with those tight turnaround times and those crisis mode situations that your families and your seniors may be experiencing. Additionally, like I had mentioned, funds are going to be sent directly to your community. That way, no one in the family, the senior, the adult children, anyone else is going to have to play treasurer with any of the funds. And we all know that the bill is being covered to the community on the back end by ElderLife. This loan will be set up like a line of credit. So they're going to be approved for a larger amount, and they're going to draw off that each month. And then during the course of the loan, they're going to owe us just low interest only payments on the funds that are used thus far. There are no prepayment penalties as well. So, if that home sells a couple months ahead of time before we thought it would, or those VA benefits arrive a month early, that's no problem at all. They can pay off the loan early, and there's no penalty for doing so. And then lastly, we can add additional funds for repairs or moving expenses. So oftentimes we do need to sell that house before moving in, but we need to, clean the carpet and put a fresh coat of paint on the walls before we can get it sold for the maximum amount of value. We're more than happy to include those funds in to make that transition as simple as possible for the senior and help get their home sold for the maximum amount of value. On the next slide here, I would love to go through a bridge loan example with you guys. So this is Carol and Emily. They have toured your community. They've absolutely fallen in love, have decided that this is going to be the place for Carol long term. Monthly rent and care is going to run about $5,000. And towards that $5,000 right now, Carol can contribute about $3,000 towards that through her Social Security and a pension. It's pretty easy to identify. We have a $2,000 a month funding gap until Carol sells her home, which is going to be her long-term solution to pay for your community. After working, with Carol and with Emily and with the realtor that they've selected, we think it's going to take about 6 months to get that, the house cleaned out, marketed, and sold. So we right-sized the bridge loan to a total of $12,000. Fast forward to the next slide. We're going to go into month one, and we will send you guys at the community $2,000 to cover Carol's month one funding gap. Carol and Emily are going to receive an interest bill for $17. They will pay that to us. Month two, they give us another call for a disbursement. We're going to send you guys another $2,000. They've now borrowed $4,000 off that $12,000 line of credit. Not going to bore you guys with month 3, 4, 5, and 6. We can all do math here. But, over the course, let's say things go great, house sells in month 6, we will still cover that month 6 funding gap. Over the course of 6 months, we sent you guys $12,000 at the community, and as far as monthly interest payments are concerned, Carol and Emily only paid us $350 over the course of 6 months, which is a heck of a lot better than the $2,000 they were going to have to come up with. So that's kind of how the bridge loan works. Like you can see below, the interest payments are as low as $8 for every $1,000 borrowed, so that's where you arrive at $17 for $2,000. But that's kind of how the bridge loan works. And if you just go to the next slide, it's just, the contact information. If you guys or any of your families that you're working with have any questions, I know she'll include that in the follow-up email. But do you guys have any questions?
I'm not getting any questions in here. I think that's pretty extraordinary and a really good tool to have in your toolbox. Thank you, John. So we're at a wrap. Let's talk about the takeaways. Hopefully, all of you understand how important it is to not get into the nitty-gritty details about finances and budgets outside of what your costs are, but if you can help that family with resources, then you become a much better advocate and a much better consultative seller to that family, which is going to translate into much shorter sales cycles and a lot more contracts signed. So what are the key things that you need to ask to access information that you now know you can help your families with? Well, first of all, always ask if someone in the family was a veteran, either the prospect themselves or a spouse. Always ask that. Then what about any long-term care insurance? We have a great resource who will absolutely take a look at your policy for free. Does your prospect have life insurance? We have a solution that could actually use that life insurance for that prospect while they're alive. What about large assets? And finally, what's the timeline? How quickly does that resident need your community? And are there some solutions that can bridge the gap? So if you don't take anything away from this, please take these questions. Every single prospect should be asked these questions. And now you should know with confidence who you can point that family to. So you've got 5 great resources now, and I'm including Looking for Care as a resource, because actually, with our help, you're going to start getting more and more phone calls. So thank you for participating. Let's all get moving.
Thank you, Deborah.
Thank you, Wendy. Thank you, John. Thank you, CJ. Thank you, Alex. Thank you, everyone who participated. Patrick, thank you all. Have a great weekend.